Hi, it's Professor Mike, and we'll be talking about the acquisition and payment cycle. So now we're on the other side of the financial statements. We're in the cash out portion of the program. So the things we'll be talking about in the next couple chapters are different types of payments that you'll make and how those flow into the payment and acquisition cycle. So the first part of this is around tested controls and tested transactions and accounts payable. So when you look at the accounts and classes of transactions in this cycle, it's goods and services, which we talk a lot about in this class that you'll be dealing with software companies a lot in Silicon Valley. And so, goods and services, payroll, consultants, marketing expenses, those are the types of things you deal with in software companies. Amazon Web Services, things like that. Nowadays, you don't buy as much capital equipment because you're not racking and stacking your own servers. You're using cloud services like Google, like Amazon, like Microsoft Azure, etc. Um, so, really, if you're in a software environment, there's a lot of transactions involving services and then people. Obviously cash disbursements are a big piece of it, and then purchase returns and allowances, especially for inventory and things like that. Those come into play in this cycle, and you can see how everything kind of flows through. Most of the time, accounts payable because you won't necessarily pay when you receive the goods or services. You'll pay after. So it's not a cash on demand type of environment. It's usually you get an invoice, you record the invoice, and then you pay the invoice at a later date, usually like net 30. So that's why everything kind of flows through. So again, on the accounts payable side, as you recall from your Business 20 class, when you set up an accounts payable, you're debiting at the asset or expense that you're acquiring, and then you're crediting accounts payable. And then when you're paying the bill, it's a credit to cash and a debit to accounts payable to wipe it out. Okay? Um, so the main functions in this cycle are processing purchase orders, so the authorization to make a purchase. So there may be a purchase requisition is an internal document, and a purchase order is often a legally binding document between the company and the third party. So again, in most systems that you see nowadays, a purchase requisition is internal authorization, which then, once it's completed based on whatever setups and requirements are in the company's system, will generate a purchase order. Quite often, these things are completely electronic now. Um, then there's the receiving of goods and services. Again, more difficult in a software company because most of what you're receiving is services, and there's not like a doc. You can go out and see stuff coming in. You're getting a marketing person, you're getting an HR person having a recruiter on staff or a contract recruiter. You're engaging independent consultants. You're paying for a payroll service. All these things are received, and tracking how you receive them can be difficult. Therefore, recognizing the liability when the goods or services are received, and then processing and recording the cash disbursements. And you can see, the different classes of transactions here. I'm not going to go through them all, but you can see between the acquisitions, the type of accounts you would impact, and then on the cash disbursements, what is basically pretty straightforward. So when you think about designing the tests, substantive tested details again are more time consuming, right? So the things that are related to the acquisition cycle are inventory, fixed assets, accounts payable, and expense accounts, right? And so when you think about these things, the acquisition and payment cycle involves four of the five most time consuming accounts. And so you've got to think about how do we reduce those substantive procedures. And of course, we know from our audit risk model that designing tests and controls around the acquisition cycle is the most effective way to reduce your substantive test work. And when you think about it, People are much more focused on controlling cash going out, right? You have signatures, you have much more identifiable controls that you can actually relate to as a result of cash going out. So I think you can identify controls in the cash disbursement cycle, even simply things like check authorizations or wire transfer authorizations to authorize payment can be great controls to reduce the substantive test work. And again, on accounts payable, we're looking for understatement. So there's a bunch of different procedures that we're going to perform and a lot of analytical procedures around expenses and things, which would then lead you to questions about accounts payable if it doesn't impact cash, right? Cash account, you know how much has come in and gone out. So other place that something can go is accounts payable. Okay. Um, So when you think about it, you design the test of controls again. This is pretty straightforward, right? The same thing we did for accounts receivable, just on the other side of the balance sheet. Okay, and you'll do some sampling for controls and for tested transactions. Um, so um, the biggest test of transactions in accounts payable that we'll go through is called the search for unrecorded liabilities. And basically, that is a review of payments subsequent to the balance sheet or test date that were made, and you see whether those should have been included in the financial statements as of the year-end date or the test date or not, right? So you look and see if the goods and services had been received. If they had, then it should be in accounts payable. If it's not, then you have an error. And this would be a sampling on the substantive side. Um, but on the control side, you would also do testing looking for authorization of payments and authorization of actual purchases. Okay, so you can see you're going to, again, this is a similar structure. So we're seeing patterns in how we're auditing. We're, designing tests of controls. We're testing controls, and then we're defining our audit procedures, our substantive audit procedures, getting a sample size, getting sample items to select, and selecting them, right? So both controls and substantive procedures, substantive tests of details, incorporate the same set of flow, right? Um, Obviously, like I said before, almost everything flows through accounts payable, so that's kind of your anchor. So that's the last place where things can go if you've reconciled cash, right? Accounts payable for software companies does not tend to be material. That's one of the distinctions between the things you see in the textbook and the real life of Silicon Valley, where you're dealing with software companies. In traditional manufacturing companies and large companies, accounts payable can be material, but in software companies, it's really not. Um, Now, in a company like Apple that buys its inventory from third party already manufactured, accounts payable can be large. But again, it depends on their payment cycles and terms. Um, so again, the same set of stuff that you're going to see chapter after chapter at this point. Identify your risks, identify the risk material in the statement, set your performance materiality, and then assess control risk, and then design and perform tested controls and test substantive tested transactions. So that's all the same for every account that we have seen and we're going to see, right? And this is your methodology, okay? Um, so analytical procedures are extremely important because you're looking for understatement, and so um, your payables balances, your accounts payable turnover, looking at expense accounts and asset accounts, because that's the other side of the entry, right? If it's not going through cash, it's either an asset that's purchased or a service that's acquired, and you want to understand the other side of the entry um, in order to understand accounts payable. So you can look at, acquisitions of materials. You can look at acquisitions of goods and services. Um, you might run a test using computer-aided software on analytics about different payments. That could also help with fraud and compliance with the Foreign Corrupt Practices Act. You can look at your major vendors and see what their activity is. Um, Analysis. Um, so again, looking for understatement because we're on the liability side. So the best way to look for understatement is go from detail to the ledger. Okay. Um, so this is the description of the search for unrecorded liabilities. So you examine the underlying documentation for cash disbursements after year end. So let's say you're auditing December 31st. You take the first 15 days of cash disbursements. You look at that cash disbursement journal. You will run a statistical or non-statistical sample on the disbursements subsequent to year end for those 15 days. You'll select your items and you will examine the underlying documents to see, one, if the good or service was received prior to December 31st, and two, if if it was recorded in accounts payable, and if it was not, to make sure it wasn't recorded in accounts payable, right? Because sometimes you can have people trying to put away reserves by accruing extra expenses so that they make next year look good, right? Why would somebody do that? Well, maybe they've already hit their earnings target for the year, and a few more expenses won't hurt them. You'll have, especially marketing people, if they haven't spent their budget, they'll like ask people to invoice them in advance for advertising or other services. And what you have to do is make sure that those services were received before year end. Um, you can also another thing to check is open receiving reports, open purchase order reports. Again, great thing to do with computer assisted audit techniques. You can scan those things and see if they're unusual or large items, and then go see if those should have been accrued. A lot of times people will run an open PO or received non-invoiced report, and and make an accrual based on that, but you do have to test those accruals. Okay. The other thing is when you're observing physical inventory, you do have to examine accounts payable cutoff, right? Because you've got to make sure that because you're comparing the physical inventory balance to the GL balance. And the GL balance is only going to be recorded if you recorded the receipt of the materials, right? The debit is to raw materials or finished goods inventory. The credit is not to cash because they're not paying that right away. They're paying it via an invoice. So that's where you've got to have proper cutoff not only on the shipping of inventory, but the receipt of inventory and the related accounts payable. Okay. Um, so the three things that give you evidence are obviously vendor invoices, a vendor statement, and then occasionally confirmations. But really, the only place where I see liability confirmations on a consistent basis, those of you who get to audit banks will see or credit unions will see confirmations of a, essentially a current liability. And those are deposits. And you confirm with a deposit holder because on a bank's balance sheet, loans are the asset and deposits from customers are the liability. And the way a bank makes money is, as you saw in Kleichman with the interest rate spread for savings and loans, you loan money out at more than you pay the depositors. And you have an interest rate spread, it's called, between deposits and loans. And so you will confirm liabilities using negative confirmations for those liabilities. But in most cases, I don't see accounts payable confirmations, but maybe in some of the bigger companies they may. Okay, um, you know the if you're verifying stuff in a confirmation, again, same thing as accounts receivable. You need to have something that is easy for the vendor to verify, right? So if invoices are better, that's great. If statement balance is better, that's great. But just choose wisely so that you don't get exceptions because of the type of item that you're confirming. Um, and again, accounts payable sample size is important, right? And so you have to look at materiality. You have to look at the underlying risk. Normally, in especially in a software company, accounts payable is not a big risk. If you're auditing software company, I think analytical procedures and the search for unrecorded liabilities and internal control procedures will get you there on accounts payable. And so it's pretty straightforward. Okay, on to chapter 19.